Hello, everyone. I welcome all of you to this GST Byte by BCS, in which we are taking a quick bite of the key decisions and the announcements of the 56th GST Council Meeting, which was held on 3rd of September 2025. The much anticipated GST reforms were announced, which is being termed as GST 2.0. Let's first come to the when, why, and what of these reforms. Uh, these reforms were announced by the Prime Minister in his Independence Day speech in August 2025, although the preparations for these reforms were underway much before the announcement, with the group of ministers on rate rationalization working for almost a year. Coming to the why, the reasons are varied. It was felt that GST has established over the 8 years. Now it is the right time to make the next level of reforms. The past experience also showed that reduction or rationalization of rates leads to buoyancy and increased consumption, which eventually leads to higher GST collection in the long run. One aspect of the Trump tariff that is being discussed, although the reforms are already in place, underway, they were going to be announced, it may be stated that because of the tariffs, the announcement and the implementation may have been preponed a little than anticipated. What are these reforms? There are three pillars to these reforms: structural reforms, rate rationalization, and ease of living. Let's first look at these structural reforms. Now, the rate structure of GST has been modified, has been simplified. Two rate slabs have been done away with, 12% and 28%. Now we have a standard rate of 18% on general goods and services, a merit rate of 5% on essential or merit goods, and on sin or luxury items, which were previously taxed at 28% plus cess. Now there is a special demerit rate of 40%. So the two slabs of 12% and 28% have been eliminated. The rationale of the structure changes focuses on keeping similar goods at the same rate of tax to prevent the misclassification. The compensation cess, since it is ending, the demerit rate has been maintained to maintain the pre-rationalization tax incidence on sin and luxury goods. The rate rationalization focuses on lowering the tax burden for citizens, supporting important economic sectors, and reducing classification disputes. The core principle is streamlining the rates of taxes, making the system more transparent and efficient. The new rate of taxes for most of the goods and services will begin from 22nd of September 2025. However, specific tobacco products such as pan masala, gutka, cigarettes, etc., will be taxed at the current rate of 28% plus cess until the compensation cess obligations are cleared. The finance minister has been given the authority to decide when the new rates will start. In the press conference, the Honorable FM has stated that she expects that by the end of this year, these products should also come under the new rates. A point to be noted is that a retail sale price based valuation will now be notified for these select products instead of transaction value. If we come to the change in rate of tax on goods, sectors across the board have been affected. Around 416 items are covered by the announcement that has been made. In the food industry, a lot of goods, the rate of tax has changed. All Indian breads, including khakra, roti, chapati, are now exempt. In agriculture, majority goods have been brought under 5%. In electronics, the consumer electronics, ACs, dishwashers, TVs have all been brought down to 18% from 28%. In automobiles, small cars, the sub 4-meter cars are now taxable at 18% instead of the 28% plus cess, which was the previous rate. The mid-size and the rest of the vehicles are now going to be taxed at 40% without any compensation cess. In pharma, around 36 life-saving drugs have been exempted. And one major change that has happened is in construction, cement has been brought down from 28% to 18%. So overall, majority of the goods, the rates have been reduced. In some cases, rates have been increased either to maintain the classification, to avoid or minimize the classification disputes or for other reasons. In services, again, major changes. Around 33 services, the rates have changed. Individual life and health insurance services, including reinsurance thereof, have been exempted. Please make note that this is only applicable in case of individual life insurance and health insurance policies. Health insurance also includes family floater policies. In transportation, passenger transportation as well as GTA services have been affected. The rate on job work services has been reduced across board. However, on the residuary services, it has been increased. A new category of delivery services through e-commerce operators is being brought under Section 9, subsection 5, where the e-commerce operator will be liable to pay tax at 18%. On accommodation services, room rent up to 7,500 per day, the rate of tax has been changed from 12% with ITC to 5% without ITC. Coming to the third pillar, the ease of living. 90% provisional refunds in case of zero-rated supplies will be granted from 1st of November 2025 onwards. A similar provision is also proposed to be made for refunds of inverted rate structure. An amendment in the Act is proposed. However, till that time, from 1st of November onwards, the CBIC will issue instructions to start granting these refunds. Refund for low value export consignments, the threshold is being removed for refunds on export with payment of tax. This will benefit small exporters who make exports through courier and postal mode. A simplified registration scheme for low risk and small suppliers will be implemented from 1st of November. This will be an optional facility which will grant automated registration within 3 working days for such system-based, system-identified low-risk applicants who themselves declare that our output tax liability to registered persons per month will not exceed 2.5 lakh rupees. And in principle, approval has been granted for a simplified registration scheme for small suppliers who supply through e-commerce operator, who currently are required to obtain registration in each state. A simplified registration scheme is being proposed. It's still in pipeline, will be announced later. A major relief to suppliers of services where there was confusion as to whether they are intermediary services or export of services. A lot of litigation from service tax regime has continued. Now, in a major relief, it has been recommended to omit Section 13(8)(b) of IGST Act, which determines the place of supply of intermediary services. The place of supply will now be determined under the general clause of 13 subsection 2. The place of supply will be recipient location. This will be a big boost for Indian exporters of services. Last part regarding post-sale discounts, the condition for pre-existing agreement and linking of the invoices, linking of the discount to specific invoices is being removed. Credit notes under Section 34 will be required for ITC reversal at the recipient's end. The previously issued circular of circular number 212, which prescribed the manner in which the reversal by recipient is required to be proved by the supplier, will be rescinded, and a new circular of clarifications for post-sale discounts will be issued soon. Coming to the GST appellate tribunal, we all know that it is on its way. Now it has been announced that this will be operationalized for accepting appeals by the end of September 2025. The hearings should commence before the end of December 2025. 30th June 2026 has been set as the date for limitation of filing the backlog of appeals, and the principal bench of GST Appellate Tribunal will also serve as the national appellate authority for advance rulings. Lastly, certain points of caution that we all must note. 22nd September 2025 has been set as the date, the first day of Navaratri, for implementation of change of rates. We all are aware from past experience that businesses face a lot of issues for implementing changes mid-month. So the systems will have to change, and the reporting will also have to be done carefully. ITC, which has already been availed on goods or services for which the rates have been reduced subsequently, the ITC can still be claimed and utilized. So which ITC which has already been availed can be utilized even after the output rate reduction. If your output becomes exempt post 22nd September, obviously the ITC that has been availed, which will have to be proportionately reversed under Rule 42 and Rule 43. Accumulated ITC up to the date of effect of revised rate is not eligible for refund. The CBIC circular also clarifies categorically that this does not fall under inverted rate structure. Major affected sector is automobile dealers who are holding large inventories of vehicles on which they have paid compensation cess. After 22nd September, there will not be any compensation cess. So the compensation cess that has been availed and which cannot be utilized, a big question now arises as to what is to be done, whether it will form part of the cost. As per my knowledge, a representation is already being made to the government to do something about this aspect. The government and the council itself has admitted that the reduction in rates may result in deepening of inversion in some cases going forward. However, they've also stated that the process reforms that are proposed to ensure expedited inverted rate structure refunds should take care of this part. We all must take into account the time of supply in case of rate changes. Section 14 of the CGST Act specifies what should be the time of supply in case of rate changes. So whenever an invoice has already been issued, payment has already been received, but services are supplied after the change in rate of tax, then the old rate will apply. So please keep in mind the provisions of Section 14 while making payment of tax or applying the rates. The FAQs clarify that as on the date of change, whatever e-way bills have been issued and the goods are in transit, such e-way bills will remain valid. There is no requirement for cancellation or reissue. The FAQs also clarify that whatever stock is held as on 21st of September, whenever it is sold after the new date, the new rates are specified as on 22nd of September, the new rate will be applicable. With this, I hope you have found our quick bite of 56th GST Council meeting to be useful. Thank you very much.